Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, February 16th, 2024. S&P 500 currently sitting at 5020. I'm David Zoll. I'm here with Super Bowl champ Ian McMillan. Not really. I believe I almost said the same numbers for the S&P last week at this time when we were recording.
Yeah, pretty flat for the week, I guess, outside of the small caps.
Yeah.
Surprising as it is to say that.
Black sheep of the family getting it together?
Yeah, Dow flat on the week. S&P flat, NASDAQ down about 1%, and Russell, even with today's move, still up 170 bips on the week.
Well, and how many weeks could we say that about, where small caps are outperforming the NASDAQ 100, as you alluded to, but yet you look at a relative chart of something like IWM, representative of small caps, and QQQ, representative of NASDAQ 100. Kind of a logical place that we've seen in the last 2 weeks to see some demand outpace supply. Not out of the woods by any mean. I think have used the example before of you got to see consistency in this area.
Yeah, still got work to do. Monday, nice follow through from last Friday, Tuesday. Big gap down. What was that? Like a 93% down day for the market on Tuesday?
Correct.
So really, on a 90% down day, there's really no hiding anywhere.
That's an important thing to highlight for the listeners. If you're new or you're not familiar with what Ian's talking about, 90% of the volume was to the downside. The issues, when you look at broadly speaking, 90% of stocks were heading downwards.
Yeah.
And that's pretty, like you said, there's nowhere to really hide in that type of environment.
And then, recovered. Now we're, basically just hanging out where we were Monday, which I guess to our point last week, that's why our point we just made, that's why everything's kind of flat on the week.
Flat, but yet we have another Super Bowl championship in your case, right? Your Chiefs, another Super Bowl win. Pretty awesome.
Yeah, I'm going to sound so greedy. It is awesome. It's great to witness. As a Chiefs fan who's watched every game, obviously, not just the Patrick Mahomes era, but for a long time.
Like the Steve DeBerg era?
No.
Okay. Alex Smith.
Yeah, for sure.
Okay.
Yeah, it was cool. Definitely not as cool, as exciting as the first one, where you've got, 50 years in between. Now that you're on the pedestal, I'm sure the players and coaches feel even more so. But it's almost like we made it through another one by winning the Super Bowl. Like, that's the bar. It's such a massive bar. I'm sure that's how Nick Saban probably felt.
For sure.
Many times.
What about Matt Castle?
I do remember Matt Castle.
How about Trent Green?
Yeah, remember Trent Green.
How about Elvis Gerbach?
Yeah.
Okay. Before Elvis Gerbach is like Steve Bono and Joe Montana.
Oh, yeah, Steve Bono for sure.
I kind of forgotten that Joe Montana had played.
Left there after, the 49ers.
Yeah, Steve DeBerg was right before that. But yeah, it's pretty incredible that we went straight from Tom Brady to Pat Mahomes, and deservedly so.
Wow. Rodgers
Mahomes.
Just so lucky. Just a lucky guy. How did that happen? I'm just glad this time around that it's my team, right? Because if it wasn't, I'd be right there. I don't think I mind dynasties as much as other people.
They're fun. And they're also fun to be like, I get why a lot of people cheer against the Chiefs. Yeah. That's what happens. People cheer against good things.
Swift thing, right? As an outsider, it's definitely I get why it would be nauseating.
Yeah. People like cheering against the Yankees. It's
because I like cheering against the Yankees. Yankees haven't been good in a long time.
Or the Dodgers.
Oh, love cheering against the Dodgers.
And
As a Braves fan.
it's almost like the culmination of becoming a dynasty. And here's why I think,
Dodgers a dynasty?
well,
I feel like they're trying to, but they never. Who won the World Series last year?
oh, was it Texas?
Did Texas beat the Dodgers?
Yeah, I think, well, I don't even know if Dodgers were in the World Series.
Oh,
I think
right. They didn't even win the division.
I think it was Diamondbacks. I think the
Diamondbacks
Diamondbacks
won the division. Oh, it was Diamondbacks, and the Diamondbacks
lost to the Texans, right? We're kind of doing this in real time, but the Dodgers historically have been really good.
Yeah.
And when you think about, and here's why the Chiefs are a dynasty, the memes and the conversation and everybody cheering against the Chiefs, it's because they're good and they want something different, right? People love something different and they love to cheer against good things. It's kind of like when people argue with the trend. The trend is the champion, so they sit there and want to fight against the trend, which doesn't make any sense to me. The trend is the trend. Like the Chiefs are the Chiefs at this point. Pat Mahomes is Pat Mahomes. He's got 3 Super Bowl wins in 6 years, and he's 28 years old. There was a time where the Patriots and Tom Brady, people were cheering for them, and then they were cheering against them. And when you hear that people are cheering against them, that's when you know it's a dynasty. And that's how I know the Chiefs are a dynasty.
I think that's a great. When does that flip?
I feel like for sure it was this year. It may have even been last year. It may have.
I think for sure it was this year.
100%.
When you've got Taylor, you've got Mr. Pfizer, you've got just like Patrick is on, like he's reached Peyton Manning status with the kind of commercials and spokesmanships, whatever you want to call them.
Just wait till he's doing a Dunkin' Donuts commercial.
Yeah, it's just, I mean.
Then you know he's retired.
And now Andy's in on the commercials, and
yes,
Travis is in on the commercials.
Yes,
it's a lot. I get it. It's a lot of Chiefs.
But it is what it is. The trend is the trend. They've won 3 Super Bowls in the last 6 years, and they've been in 4 out of the 6. Is that right? I think I have that right. And so people love to cheer against that type of thing once it becomes the trend. And yes, I can make this market related for whatever reason.
There's a lot of frustration out. Yeah.
People want to fight the trend, right?
There's a lot of fighting the trend going on. And I don't know if it's people that are underallocated, if it's people that simply, from a more macro view, they just think that the world or the economy sucks because of, we've talked about it before, like go to the grocery store and it pisses you off because it's 30% higher than it was 2 years ago. I get that. There's still a lot of equating that type of stuff to like what the stock market has to do.
Yeah, correct.
And
the stock market is not the economy.
It's not the economy, except for at like the very extremes, I would say.
Right. Or it might be the economy in real time. It's just the data is sooner than the rest of the data that comes out. Also true that what's happening in the stock market doesn't reflect what's going on in the grocery market.
No.
Or it might. So like stocks tend to do, there are times in market history where stocks do well in inflationary environments.
Well, and like how, especially in the day, like, okay, you get on Twitter and you read, right, all this stuff that's out there. Nancy Pelosi made $3.5 million on NVIDIA. And like that stuff is going to piss, like, how do you feel if you're the average American who's just trying to put like $50 away a month or whatever into investments? Like, I just think there's also a lot of built up angst, like F this whole thing among people. And yet you see the market. I mean, we're at all time highs and keep higher, day after day after day. I mean, there's just broad frustration with the market and people either, not being able to participate, right? Because people love to hate on things that they aren't like a part of.
Mm-hmm. Yeah. Like, yes. Like I'm not.
He got those new Jordans, but they're kind of like, dude, they're kind of ugly, right? Like they're kind of ugly, right? Like
I'm not a Chiefs. I'm $500,
but like I wouldn't wear them.
I'm not a Chiefs fan.
Yeah, you would, and yeah, you would. I don't know. It's
such.
I don't know if it's a societal thing, and clearly, I'm like going off on like a tangent here.
No, it's a human nature thing.
I think it's a human nature, and like it just continues to boil. Like people's personal financial situations, on average, gets tighter and tighter every month when it comes to, employments. We see employment numbers, but as far as, expenses and things like that. And
People like success, but just not too much, Ian.
I think people, like success,
But not too much. Not too
as-
much.
Exactly.
Like, hey, I like the Chiefs, but it's not my team. So if they win too much, I don't like that.
Yeah.
Or like, hey, dude, that guy's really killing it, or that gal's really killing it over there. But once it's like 10 years in the making, you're like, oh, that's too much. They're collecting too much.
With the market, right? Like once you're out, like your bias is in. Like even if you're like, no, I'm out. If you thought markets were going to roll over at 4,800, right? Because at some point it now becomes like hope.
Well, and I think that goes back to
I hope this comes back down and I'm right.
yeah, because that goes back to the old axiom, which is basically, am I in cash because it's a bubble?
Yeah.
Or is it a bubble because I'm in cash?
I think that's so perfect. And as for some, I think it's more recent as far as this aspect of being underallocated. But, I think there's just a lot post-COVID that has led people to not be interested in stocks. How many were a year off of we'll call it 16 months off of a bear market bottom, October 2022?
Oh,
So
yeah.
roughly 16 months. We'll
Yeah,
call it
right.
16 months.
And we're barely above highs that were made in late 21, early 22. So we've gone nowhere for 2 years.
And if you were big into the growth stuff, you definitely have not made it back. Like if you were big into the ARKI, small cap growth, altcoins, NFTs, some of that never made it back.
And interestingly enough, could be about on the turn to make it back.
Yeah.
It is an interesting dynamic of, I would say that the market is not, and this is a very subjective thing, there's no way to quantify it objectively, that if we're at a point of optimism, I would disagree with that. I think we're still at a point of pessimism.
Mhm.
And when you look at what John Templeton said about markets tend to end at euphoria. And there's plenty of naysayers right now.
There's a lot of naysayers, even on the technical side.
Correct. So then there's part of me, and I'm not even sure about optimism, because if you're an optimist, or if you have an opinion that's of optimism on this market, you wouldn't be trying to short it.
You definitely can't short it. I would put myself in the category of, I guess, the trend is the trend. And that hasn't, like, I understand all of the underlying data, and we've talked, and that's, getting a little bearish. We've talked about it, a ton of it on here, whether it be momentum divergences or breadth divergences, divergence in relationships like discretionary versus staples.
Right.
And we, our team sees it, but at the end of the day, like, I get the skepticism, but I think the demand out there, look at the recovery we've had, and maybe this all rolls over. Maybe Monday we have another gap down, and oh my gosh. But I think the demand out there, especially following something like Tuesday, is pretty impressive.
Absolutely.
That we could be at this stage of the rally and have how much were small caps down Tuesday? One of the
4%.
4%. And now they rallied. I think they rallied into the close. I think we were down 5% at one point.
Oh, yeah, that's right. It was down 5%. It was a 4% drop. But in 2 days, we recoup it.
And made it back through the gap. The NASDAQ, I haven't looked it down. So I'll put an asterisk next to this statement. NASDAQ was the only one that hasn't really made it back through its Tuesday gap. Russell made it back to year-to-date highs yesterday.
Right. Well, and we're on the cusp of the Russell 2000 using IWM closing at its highest level on a weekly basis since April of 2022.
Yeah, look at that. Yeah.
April of 2022.
That's not a bad candle. That's not a bad. You close the markets now, I'll take that candle after what we've been through on Tuesday.
Yeah. And
when that continues to be, and that stuff, right? Because Tuesday was like, okay, look, well, this is clearly it. Like this is it. This is we finally get the sell off, right?
Oh, the market must crash.
Yeah, like that had to be like, okay, now it's finally going to start. Russell fails again. All these big gaps. For outside the last 30 minutes, it was a pretty nasty day. And to my point earlier, you had demand come in and just bought it right up.
Well, and this goes back to Russell 2000 hasn't gone anywhere since April of 2022 in a sideways range, massive range, 20% range. But here we are on the cusp of a new weekly high, and yet we're still 19% away from the all-time highs in small caps.
Yeah, back to 200. And what's different is this time in Russell, all the other times we got up to 200, 201, whatever you want to call it, immediately
Rejected
and went down.
Yep, sellers.
And this time, there appears we decided to accumulate here at these levels.
Yeah, the volume profile would absolutely say that they're willing to buy this sooner than they have in the past. Going back to April 22, exactly right.
It's a little bit of change of scenery, and we see earlier we talked about what the indices had done on the week, but tech, discretionary, and comm services, right, they've led the big hoopla the last 3 years. They're the worst performing sectors this week.
Really?
Energy, materials, and financials, the 3 best sectors this week. So now I preface, right, Russell's done this before, but again, I think the market's held up pretty well considering, Apple certainly hasn't participated.
And that's the interesting dynamic this week is your large cap tech has struggled, and struggle is a relative term, but it's struggling in comparison to small caps. And as we've highlighted on this podcast, is this the start of the rotation into small caps? I mean, if you drew it up, this is what it would look like.
This is what it would look like. And again, Russell has started this drawing before, and then I don't know, I guess he just throws it in the trash. But yeah, you continue to see biotech, if you were looking at IBB, has great setup, great potential.
Well, I think that goes
Energy's trying. Energy is held in there really well, and I think is back above a 200 on absolute basis with a divergence in there. Never got oversold. So could you see? There's definitely some components there. Banks, we'll see.
I think you bring up a good point about biotechs. So there's a couple things with biotechs. We all know that high beta area of small caps.
Yeah.
They are, if you're going to say risk on versus risk off, obviously biotech is risk on. Like you're not hiding out in biotech stocks if things are bad.
No.
And it's,
or at least not me personally.
Yeah, correct. It would be really weird if people were like, yeah, I'm hiding out in biotech because the market's crashing, because that's going to be the area that's really going to hit. But you also look at the makeup of small caps. There's a large contingent in small caps that are biotech. And you made a really good point, and I'll probably harp on this for like 6 months, probably. So forewarning to our listeners, but the breath thrust that took place in late October, early November of last year, where you saw small cap leadership begin, or we can say potentially begin, it really becomes apparent that that's kind of what's underway here. And of that, biotechs have led. That's worth paying attention to, that biotechs from the late October, early November 23 bottom where the breath thrusts occurred, biotech has led. And that's hyper risk on. And even if we see mega cap tech not carry the weight this time, this is kind of like that upstart rookie who shows up and might start carrying the team. And we haven't seen it for a while. Yeah, it would be nice. It's something we haven't seen for a while. I mentioned April of 2022. We're now in 2024. You've got a kid that's graduated from diapers into like wanting it to be work off season. We have biotech potentially on the verge of leading small caps higher. I get it. Small caps are not just biotech. I don't want to probably spending too much time on it, but it is information that in the past, since April 2022, every time that small caps have gotten to this area, let's call it 190 to 205 in IWM, it's gotten sold pretty hard. But here we're holding since mid-December in that area. Is this the rotation into small caps? And
Definitely
look,
different behavior.
yeah, for sure. What else? What else, Ian? I know people are a fan of divergences, but they talk about the negative divergences, and here you're talking about the positive divergences, and that's small caps. Like there's a positive divergence happening.
And I think
small
even,
caps.
and this is, and I'm gonna go. I think David Cox had a chart this morning. Now we've talked about small
Great
caps.
technician.
We've talked about small caps leading off the lows. Micro caps actually ahead of small caps off the lows. So
Ooh.
another layer there to the risk on high beta willingness to be involved in those areas. I know, right? Because we went through that 5-week period there where it was really all S&P. And mid caps have also done better than the S&P. So off the October lows, according to David's chart. So the S&P has been a little bit more of a consistent low volatility melt up. Yep. And the high beta stuff has tended to come in clumps, potentially poised for another leg from those market caps.
Yep. That's not bearish evidence. If you're going to see, and to paint that picture again for those who might be listening to this, who are trying to grasp the environment, when you look at the S&P 500 on a cap weighted basis, capitalization weighted basis, there's a heavy tilt towards growth and tech. And then there's the next 500. And then there's which would be the equivalent of the Russell 1000. And then there's the next 3000, and that's the Russell 2000. And we are now seeing strength out of that, let's call it bottom 2/3, bottom 3/4, that we haven't seen for a while. And it's not risk off to see that. If you're going to see stocks that are smaller than Apple, smaller than Microsoft, smaller than Meta, move higher at a faster rate than those stocks, unless they're a staple, is that really risk off behavior?
No. And like I said, and it's kind of, we've talked about this before as well on the podcast, that Monday morning theory.
Mm-hmm.
I think that's a microcosm of how a lot of this happens. It goes on these, right? Like we saw in early November, we had this 2 or 3 week rally where just the things we were just referencing, high beta, low market cap, things really were super strong. And then we went 4 or 5 weeks sideways where they didn't do anything. And it's, if you don't catch these things in their uptrends and you end up jumping on at, after they've rocketed for a few weeks, and then you find yourself, you're a few weeks into that trade and you're like, well, gosh, these things have underperformed the S&P now for a month. I think you got to be there. And the only way to do that really is, for me with a chart, I don't know how you could look at fundamental data and decide what companies are going to what market cap tilt you should be leaning towards.
Yeah.
Over any given time.
Because in the end, the fundamentals are in the technicals. Fundamental information, the opinion on those is reflected in price.
And we got a weak dollar or a weaker dollar the last few days, which I'm sure has helped. So back below, not below 104.
Well, and actually, yes, weaker dollar recently,
yes.
very, very, very near term, but strong dollar.
Strong dollar.
And you're seeing risk on behavior. So that's
true,
arguably a correlation or decorrelation story where there are times in the market where the dollar is strong and small caps are strong. Things go in and out of correlation. There's times where you're driving with the traffic and there's times where it feels like you're driving against traffic. And is this one of those times where we're seeing things like the dollar and treasury bonds go back to their decorrelation behavior, like bonds down, stocks up? We could be back into that environment. Or is it dollar is now going to move in correlation with stocks? Because there used to be a narrative years back where the dollar is stronger, small caps are stronger. Are we seeing that? We don't know this until afterwards. A question is not meant to be like, yes, Dave, we're seeing that, or no, we're not seeing that. It's just we have to be open to Yeah, absolutely. Since the COVID crash and recovery, bonds have moved in correlation with stocks. The dollar has worked inversely correlated with stocks. But are we seeing a re-correlation in some of those environments where bonds down, stock, dollar strong, small cap strong? I don't know, but we have to be open to it, don't we?
Weakness in the dollar, it's coming to a pretty logical spot. Will that kickstart, right? Because the underperformance from small caps started late December, and that's when the dollar bottomed. And so will we, right? And we had a weak dollar, right? We topped on Halloween, basically. Very weak dollar there for 5 or 6 weeks, 7 or 8 weeks. And that's when small caps had their big relative push. So potentially, with a weak dollar, do we see small cap outperformance again? Or, micro cap outperformance if you want to take it a step further down the risk spectrum.
Yeah, could be. And we're still in this seasonal period where seasonal weakness is.
We're supposed to get it.
Right. We're so correct. And that's how you should. Yeah, I love that you said it that way, because that's how you should be using seasonality. Seasonality is not a guarantee.
And I think that goes back to a lot of what there's. And so we talk about, I'll put it in that bucket from our conversation earlier of bearish divergence and momentum. Bearish divergence, if you want to look at, moving average, stocks above moving averages and yada, yada. I'll put seasonality in there. I mean, we've been talking about for 2 weeks, stocks are supposed to be, I want to put that in bold, italic, underline. Supposed to be getting weak in here.
And when they're not, that's information.
Well, and I think that there's a lot of people that make portfolio decisions before, instead of just letting it play out. And just, again, at the end of the day, it's price.
And it's trend.
And I get that these things are supposed to happen. And again, if this could start Monday, it could start this afternoon, and we end up down 2%, and that ends up being it. And then we're sideways through March.
Yep.
But it hasn't happened yet. Or is it, Dave, that all this data, all this seasonality data that we like to look at is on the S&P, right? Well, it's not. Well, I mean, I personally haven't seen Russell 2000 seasonality. Maybe it's different.
Oh, and there's years where the Russell carries us higher into summer, like 2018, where you had Volmageddon at the beginning of that year, and actually it was small caps who carried us into that summer. That's also a possibility. But your point is extremely valid that seasonality is not a predictor. Seasonality is not a signal.
Just an average.
Yeah, it's an average and something to be aware of environmentally. And as Ian said, we could start trading stocks on Tuesday next week after President's Day off and see stocks correct into mid-March. That could still happen. At the same time, I look at next week as being, how would I describe this? It's highly informative if next week stocks hold their gains and don't sell off. Because this is like mid-February is when we tend to see this.
Especially yesterday. I mean, I've seen seasonality reports that say it starts mid-February, and I've seen some that say it starts the beginning of February.
Right.
I will say it's and it's an average, right? And what do we say about people like, that the stock market's up 8% a year on average? Well, how many times is it up 8%? Or even anywhere from 7 to 10? Rarely.
That's the least likely scenario.
So are you gonna have it? I'm just saying I'm not willing to miss out on an outlier situation where we just buck seasonality and we're up another 5, 7, 9%. I'm not willing to miss out on that because of, an advanced decline line or bad breadth.
Yeah. Well, and we've seen bad breadth in the past, but that was under a downtrend. We're now in an uptrend environment. There are periods within an uptrend that you see participation narrow, but here's the deal. What if it expands? And you say to yourself, well, what do you mean? How could it expand? Well, look at what the Russell 2000 is doing.
Yeah, just as the S&P is broken to new highs, and I know we technically got there 3 weeks ago, but in the grand scheme, of markets, we've really just broken to new all-time highs.
Correct. I mean, if we're going to use the same rules that we used, or I should say, same sentiment that 2013 was the beginning of a new bull leg because we got above the 2007 and 2000 highs in the S&P 500, we should be able to use the same methodology and say, yeah, we just started having a positive return above the late 21, early 22 highs. Like we're just starting, which matches what we saw late last year with the breath rust that we saw. That's early behavior.
I feel like there's more skepticism now than we had summer, fall 2020.
Yes, absolutely. Yes.
Because everyone, oh my God, because that was the hype. I mean, that was GameStop, that was AMC, NFTs.
That's because everybody was trading in their pajamas. They were home from COVID, and they were trading.
2020, we skyrocketed out of it. I think there was some like, holy, this is and that went into really bled into 2021. And now there is, I mean, you do like, at least in crypto, you're seeing the same thing. So is it people that got out that are not participating in the latest bull rally? I don't know. Definitely a different behavior, though, from my perspective, than we saw in 2020. To your point, Dave, everyone's working at home. Real easy to log on to your Robinhood account and trade some meme stocks. Maybe everyone, they had to go back to the office. No more meme stocks. I'm going to be honest, most of those people probably left the game at a net loss. If you were involved in AMC or NFTs, for sure. GameStop probably for sure. And yet, so you had all these people that walked away, said, the market's too hard, it's not for me. And then now it's rallied for the last, 15, 16, 17 months.
Correct. A lot of angst. It's skepticism.
Like, how can we be doing this? The economy's bad. Credit card debt is at an all-time high.
In nominal terms, no consideration for percentage or demographic terms. It is
a recession, I heard. And the Nikkei is almost back to its highs from 1989.
Yeah, right. 34 years in the making. And we've got the Nikkei 225. Just amazing. Back to 0% return since late 1989.
0% for 30. It's almost I was born in 87, so it's almost my entire life.
I mean, it's super historic.
That's wild to me. Because they're one of the largest, the fourth or third, whatever, largest economy.
Yeah, they're a developed economy.
I heard that on this latest recession thing, it slipped from 3 to 4. Fourth largest economy in the world, a stock market that has gone nowhere for 35 years. That's crazy.
Yeah. And how many people do you hear talking about it?
Like zero.
Right. To me, that's the epitome of the information you're looking for. The Nikkei has been in an uptrend here for a while. We're hitting these levels that we haven't seen since 1989, 1990. Do we continue to move higher? I don't know. Like, this is where sellers showed up in the past, or maybe buyers got exhausted. But are buyers exhausted here? I don't know. But we can use charts and pay attention to the information. But the fact that the Nikkei is all the way back to these levels, if we were to break above here, that would also be extremely bullish information. That we're willing to buy Japanese stocks at a rate more than we were in 1989, 1990.
Be quite the major move.
It would be.
I'm not saying we move at the same pace, but
right.
Yeah, for all the and issues that Japan's supposed to have, all these things that people get caught up into, demographics, and again, maybe it does affect it. I have no idea what I guess it just said the Japanese economy went into recession. That's what I read all day on Wednesday. So I guess their economy sucks, but their stock market, I don't know, it's been doing pretty good for.
Well, clients, some of our clients are aware of our exposure there. And it also goes into the Japanese yen versus US dollar being.
Outperformed US stocks for the last year.
Right. And if you look at the currency of the yen versus the dollar, when many stocks began getting bought in late 2022, That's where that relationship hardened up and moved higher. And we're back at those levels again. We could just be starting. And I know that sounds hyper bullish, and really none of this matters unless we're above 4,800 on the S&P 500. We just talked about a new potential weekly high for small caps. If we're not holding those levels, everything that we're talking about doesn't matter. And that's the power of using charts, is it allows us to build thesis when that thesis is being confirmed or refuted. Time will tell. But right now we're bucking seasonality, important information, could change next week, could see weakness into mid. And here's the deal. You could see weakness. Let's say we do get weakness into mid-March. Do you think, Ian, that people would be falling over themselves to allocate in mid-March? Probably not. They'd probably be scared.
No, we would have come up with some wild narrative by then.
Right. Like, oh, I can't believe that this is an open race for presidency, or that we're going to war over here, or whatever it is.
Yeah.
That
we can't buy stocks. We don't even know who's going to run as a Democratic nominee.
Right.
There's too much uncertainty.
Yeah. And that's all there is. That's all there is in markets, is uncertainty. By now, if you've listened
to this.
Wait,
right? You wait till the coast is clear, or all your signals line up, or
that's the top.
I'm not saying I'm not the firmest believer of buy when there's blood in the streets, because there could always be a lot more blood to come. But on the on the opposite extreme, waiting for everything to line up perfectly, and we've all seen those charts, right, where it's like 120 years of the Dow, and it shows like all the crazy stuff, politically, or whatever, wars or crises, and the chart is up and to the right. And I'm willing to bet over the next 100 years, the chart of the Dow Jones will be up and to the right.
Yeah.
And there'll be so much crazy stuff.
And it's one of those things that what you're saying is true. Here's the parable of the paradox, right? It's one of the things, if you're going to manage money, is you have to deal with paradox. And here's what I'll give a microcosm, and then I'll give a macro or a bigger picture one, right? We've all seen like, oh man, those earnings are terrible, but price moves higher. Or, oh, those earnings are amazing and price moves lower. That's paradox. Like, how could that be? It defies your own paradigm. The same can be said from a major level when you bring up an absolutely truth. It's a truth that the Dow Jones moves from lower left to upper right from a very big picture perspective. It's also a truth that American markets are one of the few markets that haven't gone to zero, similar to like how a turkey behaves its life for Thanksgiving.
Yeah.
We're not here to tell the Dow Jones what to do. Ian's point is just, hey, the Dow Jones has moved from lower left to upper right for a long time. And during that period, there's been an abundance of uncertainty. Some call it a wall of worry.
So much uncertainty.
Yeah.
On a day-to-day, or whether, we're involved in some big macro, who knows? And it's not just, what the Fed's doing, interest rate environments, all these things. And yet the chart is still up and to the right. Yeah, there's some pretty tough times. Then there are times when the market reacts to the economy, or they do line up, like at your like I said earlier, at your extremes. But for the most part, yeah, the American ingenuity, is that the right word? Maybe, I don't know.
Yeah. Well, don't fight the trend. And there's times where the market's in an uptrend. There's times where the market's in a downtrend. Right now we're in an uptrend. We've cleared important levels. That's the big picture perspective. And we're seeing small caps firm up, which we haven't seen for well over a year, arguably 2 years. And so could we just be getting started, and that there's a narrative ahead of us that is going to reek of euphoria? And that's when we want to think about de-risking and reducing allocation.
What do you think it would take for people to get to euphoria stage?
My guess, Ian, is that this next leg, euphoria is going to be the AI story, the artificial intelligence story. So that's my guess.
But is there euphoria in the streets?
Yes.
I'm wondering.
It'll be
or is there going to be even more angst? Like, we talk now, I wasn't around for the dot-com bubble, but a lot of the behavior that I've heard about, right? People quitting their jobs and they get E-Trade accounts and they're going to day trade for a living because Cisco goes up 5-10% a day, right?
Same thing will likely happen.
Or did we see that in 2000 and that's been wiped out?
Well, but at the same time, everybody got involved in real estate in
yeah, that's
04
true.
to 07.
That's
And,
true.
and the phrase that came along is this time is different. And so what'll happen is we'll get this massive appreciation. It'll be before its time. It'll pull demand forward and you'll get this, everybody's involved with it. Yes, there'll always be the angst about like, am I losing my job because of artificial intelligence? There'll be that in the backdrop, but it will be this time is different. This is a new era. And it's true, but it's also false. That's that paradox that.
Was there any fear that people were going to lose their job due to the internet?
Yes.
Okay.
Yes, 100%.
Really?
100%. Right? Because if you got e-commerce, you don't need a store. If you don't need a store, then you don't need real estate. If you don't need,
you don't need a cashier if you're just going to sell everything online.
Yes. Same thing with CDs when we went to digital. Like, what about the CD makers? Same thing when we had cars. Well, what happens to the horseshoe makers? Like, there's always
what happens to them? I don't know.
Yeah, they move on to a different job because we're more productive than we've ever been in the past. And that's how it's going to be again, is artificial intelligence. Yes. Is there going to be a shift in the labor force? Absolutely. But is there going to be this massive loss in labor? Are people working? No. They'll just be doing different things at a more productive pace than they've ever done before. Will we move from something less than a 40-hour work week? No. We'll just get done more in a 40 work week than we ever had before. That's what we've done over and over and over. Locomotive, cars, the computer, internet, AI, same thing. Now, again, I don't know what the narrative could be about, but the bubble, like if we're getting into bubble behavior, this euphoria thing, gets back to my son's not going to text me that he thinks the market's going to crash when we're in euphoria. I know that. Same with my mom, which has just happened in the last week.
I had a friend on Tuesday texting me and he's like, oh, this is going to be a normal market correction. I was like, bro, it's 11:30. It's 11:30 in the morning. Like, we're not even through today. And that's a little too short term for me. And I say that as someone who in the past used to work, oh my God, we're down, 3, 4, or 5%. And now where are we at 48 hours later, 72 hours later? And I'm not mocking that person. And this person does not work in finance, but that's I think to our point earlier, I think there's a broad, okay, stocks have been up for 5 months. When is this going to be over?
Time frame matters because stocks have been up for 5 months, but they've also gone almost nowhere
sideways
for 2 years.
Or they're up, 1% for 2 years. Exactly.
I think we always have to defer to the larger or longer term time frame. To your point about the Dow Jones and hundreds of years, that's the time frame you should defer to.
Yeah, I mean, don't ask yourself, oh, should I invest more in my 401k and then worry about what's going on in the market at lunchtime. That's not your time frame.
Right. Your time frame's much longer than that. Absolutely. And before we wrap up, Ian, I'd like to highlight the supporter of our podcast, Adaptive Select ETF, listed on the NYSE under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. We have some time left, Ian. I wanted to get that in there.
That ETF you mention every week?
Yeah.
Hasn't done too shabby lately.
No.
I'm a superstitious person, so I won't go too far. But,
well, I think that highlight gives us some opportunity to talk about momentum and relative strength. And another way to say momentum, and as an example, NVIDIA is now the third largest company by cap size in the United States. That's a perfect example of momentum. And here we have it continue to move higher. Does it have to? It doesn't. But these things matter. When we talk about small caps have not had momentum. If you were to look at our small caps on the doorstep of momentum, this is what it looks like. And if small caps are on the doorstep of momentum, bearish can we get? It's really hard.
Yeah. Combined with the other things, like you said, Japan.
I mean, China might have exhausted its sellers. You look at like biotech stocks within small caps. You look at
German DAX is out to brand all-time highs today.
Again.
Consolidated for the last 2 or 3 weeks. And
I'm as surprised as the Chiefs winning the Super Bowl.
what about our friends in France? How are they doing?
Worth looking at. What do you got?
New all-time highs today.
Okay.
At 40.
So you have these developed nations, China, France, Germany, recording these significant events.
Japan.
Oh, did I miss that? Sorry. Not China, Japan.
Definitely not China.
Yeah, not China. China is at relative all-time lows.
Ugh.
Looks
They're
terrible.
trying to get it together. I mean,
they are, and this goes back to, is this where we want to get long or is this where we want to get short?
yeah,
When you look at
China here.
Yeah, like I don't think you want to get short China here. Similar to if you haven't been involved in Japan, is this where you want to get long Japan? Probably not. But the DAX, maybe. I mean, that just cleared all-time highs. But is the DAX leading? Like, could you see the Nikkei doing the same thing as the DAX just did? I could.
Yeah.
Definitely a possibility. What else, Ian? What else is worth highlighting before we close up?
Yeah, I think you still continue to see a lot of the areas that have worked continue to do well. Semiconductors, do we get this flip from growth to value? That's what I'm interested in as well. Not so much because small cap growth has been, even in this weakness, has really outpaced small cap value. That will all value. Mid cap, mega cap, large cap, small cap, all that, growth is led from the year. I'm interested to see if we do get a rotation in the market, if there's also a rotation back to value, if that follows through. Because if it's biotech, then if biotech leads, then maybe it's not super value-ish. I don't know.
Yeah, it could be growth.
It could be very growthy. And it could be like software and things like that. And not banks or, transports is still an area that I think looks great on an absolute basis and would love to see more out of on a relative basis.
Well, same thing with small cap industrials. Still looks good. You're seeing small cap energy at logical levels where you'd see demand take over. So is it just a massive broadening out that we're about to see? Is it the echo to the breadth thrust that we saw in October, November? Is this the second coming of that? Now, whether that happens during a seasonally weak period is to be determined. If it does, though, that'd be alarmingly big. Like, things would be going off. Like, that would be tremendous information. If going into mid-March, we're not selling off and we're seeing a broadening out, I can't think of anything more bullish than that, personally. So we'll see. Time will tell.
Time will tell.
And so with that, we have a little extra time this weekend. We've got a 3-day weekend with President's Day on Monday. So the market is closed. The office is closed. These are good things. We want to sit back and reflect things that have been impactful in history. And one of those for our country has been our presidents, specifically the birthdays that we're celebrating for George Washington, Abraham Lincoln. And if I may, Ian, similar to, are we in a bubble because I'm in cash, or am I in cash because it's a bubble? Abraham Lincoln also said, we can complain because rose bushes have thorns, or rejoice because thorn bushes have roses. I prefer the latter. Let's celebrate the fact that a thorn bush has roses. I understand there's divergences in the market and they can come to fruition over the next 30 days. That's absolutely fine. But for the time being, there's a trend and let's enjoy it.
I agree. I think it's a great quote.
It is. Great man. Great quote. I appreciate you, Ian, being on here. So happy your Chiefs won for you, but also for the fact of trends. I've got nothing else to add. Thanks for being on here with us. If you guys love this podcast, please share it. Please give us high rankings. We really appreciate it.
Have a great weekend, everyone.